In this video, watch how two traders made two different trades in the same stock. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, two developing traders found two different ways to trade an opportunity after Home Depot's earnings. Let's get to work on sharing these two different trades from these two different traders from our prop desk in New York City so you can grow your trading account.
Starting off, to introduce myself, my name is Caleb.
My name's Preston.
And so we thought it would be a cool idea to do a playbook based on Home Depot and their earnings report. I liked doing this as a day one play, whereas Preston, he really enjoyed doing it as a day two trade.
Where'd you guys get this idea to do it together?
So I thought it would be a cool idea to kind of collaborate, just because it was a report that we were both learning at, or both looking at. And for me, I was looking at it as there's one form of entry that I was looking at, whereas Preston was looking at it from a different perspective. So basically, Preston likes to trade momentum off the open, whereas for me, I like to kind of wait to see the direction of the stock and how it's playing out to see where I would like to enter into a position. So I thought it'd be cool to kind of present this just based off two different perspectives and how you can collaborate to bring two ideas together. To one, I think doing that can kind of maximize your potential profit, and two, how to fully execute a trade that we can both learn from to do it individually.
Love it.
Going into what Caleb was saying, this was definitely something that we were discussing when the report came out. And I took it the first day, but I really liked it for a day two continuation because I thought that there was a lot of momentum, and I thought that we would continue to the upside, being that we were in a great technical spot and with the catalyst.
Going into my day one trade strategy, Home Depot came out with their earnings report, Premarket, on November 16th of this year, and it was gapping up above its previous all-time high level of 375.15. So for me, my perspective on that is that when you're gapping above the all-time high level, I like to look for some kind of retracement. Obviously, off the open, whether if it was a first move down or if we got a first move up with some kind of pullback. Whether that's obviously on the day of, I like to look for pullbacks into VWAP. This kind of fell a little below VWAP, but it was still sustaining above its all-time high level and pre-market levels.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So for me, my parameters of this trade, for an entry, I was looking for a retracement back to VWAP. When I entered into my trade, my average price was at 381. And the stop that I was looking at was on a new intraday low, if it did break 379, to basically negate the upward trend for continuation.
So I want to talk about that a little bit. So Caleb, you're a senior intern, and Preston's a junior intern. And one of the things that I think is a best practice that you're to make into a habit during your internship is to create a game plan. So you guys have access to Spencer's AM meeting. You have access to Carlton's AM meeting where you guys are discussing morning trades. And then you have some time after that to sort of think about what you're going to do. But a best practice that makes a lot of sense is for you to create a game plan. And that game plan ought to be, hey, I'm thinking about trading these stocks, and I'm thinking about getting into these stocks at these levels if these things happen. And so one thing about that idea you have right there is, I wonder if there's different ways that you might get into this trade. So, all right, you mentioned you like pullbacks.
Yes, sir.
Good, and I like the fact that you're identifying what you like. We want to build from the things that make a lot of sense to you, even at the beginning of your career. So we like that. So all right, so I'm going to game plan. I'm going to sub-game plan in this case. Hey, if there's a pullback in a strong stock, I want to get long. But what if the stock tanks and then reclaims VWAP? Or what if the stock just has a hard sell-off on the open and then gets above a range after some period of time? Or what if a stock jettisons to the upside, goes sideways for 30 minutes, doesn't really pull in, and then makes a new high? I would think that there is more than one way, even at the young part of your career, where you can see really good trades for you. And what I would suggest that you do, and I think is a really great best practice, is to game plan the trades that you want to get into. And one of the things I challenge you to do is think of more trades. You don't think of all of the trades, and don't overwhelm yourself, but you want to warm up. Like an athlete who plays basketball gets out there. Preston, I know you play basketball, but if you were to go out and play basketball, you wouldn't just run onto the court and start playing. You go out there, you stretch, and then you go out and you shoot some layups and some short shots and some longer shots, and you do some drills, and you wouldn't just go out there and play. And the way that you warm up as a trader is you start to think through the different trades that you want to get into for your business. When I think about the stage you guys are in, you're in the development stage, you're in the discovery stage. What kind of trader do I want to be? What trades do I want to trade? In that stage, I'd like to see a game plan. I'd like you to be thinking about a game plan that has more trades in there.
Of course.
And maybe you just put that up there because this is the trade that just happened, and so you didn't want to go through all the other scenarios. But I do want to be clear that you should be going through that warm-up exercise.
Of course.
You should make that into a habit.
Of course. One thing that I usually like to do when I go looking at a stock, if I'm wanting to get into a certain, like a position, I look at different permutations. So when I look at what happens if there's a first move down, what happens if there's a first move up. So I have those permutations already set for what I'm looking at. If there is a first move down, what kind of technical levels am I looking at? Am I looking for an entry at pre-market support with a stop at a pre-market low? So I do have those in set already, but not as fully. I guess it's more of like when the trade that we are reviewing occurs, that's the permutation that I'm discussing about. But I know that's kind of, like you said before, that's one thing that you always want to have because you're not sure what is going to happen off the open. So to have those permutations and those game plans ready is very vital.
So I want you to be thinking through that, warming up,
Of course.
having ideas as to what your best trades are, and then after you do that, you can just play.
Of course.
Now there's not as many things to think about. And so you don't want to be so closed-minded that you're only going to do the things that you game plan for. The point of the game plan is to have to think about less when the market opens. It allows you to use your intuition that something is setting up for you to press the buttons on better. And so, and that, you just play. All right, I've thought about this coming back into VWAP after a strong opening drive. I thought about that scenario. Look, that scenario is coming. It's pulling back in. It doesn't quite get to VWAP, but it's close enough. And now there's a big buyer there. That buyer's there. My intuition's telling me that buyer's in there because there's more to go with this particular buyer. he's buying it higher than VWAP because he's got to, and he's got a lot more to buy, I should buy this thing. Let me just, I'm in. Stops below, stops below VWAP, and I'm ready to play.
Fundamentals of Home Depot. We're just going over it. It's 1.05 billion outstanding shares, 71.9% institutional ownership, very low percentage short of 0.93%. Looking at it, the average 20-day volume was 2.78 million shares, an ATR of 5.19. Going over the report, just in general, they had an EPS beat of 50 cents, which was a 14.6% beat, and a revenue beat of $2 billion, which was 5.7%. They also had their same-store sales were up by 3.7%, and their U.S. same-store sales were up by 3.2%. The one thing I would have liked to see that would have given me more conviction was any kind of guidance. When I was looking for those details, I could not find anything in regards to guidance. But if there was guidance, if they issued guidance for either for the full year, I think the full year outlook, that would have given me even more conviction for this trade. So usually when reports come out, I do like seeing that guidance on there to have higher conviction. But just from the report, without the knowing of the guidance, it was still a strong report. And so one thing I was also looking at too when going over is the consumer discretionary sector as well too, that ETF for
So do you guys get the research that we get at the firm yet?
Yes, sir.
Okay. And that's a good thing to sort of comb through to see if anybody's done a couple of quick notes on Home Depot and see what they're saying as well.
Through like the morning, like the emails and everything overnight and everything in the morning, yes, sir.
Yeah, I mean, if I'm going to trade something on the open and I'm game planning to do it, I think it's a good best practice to just check your email, type in the ticker, see what's come, see what research has come to us, and then just quickly read it and see if there's any meaningful in there.
Of course, yes, sir. Yeah, I know. Like for me, like when I look at it, like I'll be on different news outlets trying to see if any of these outlets have something different that may provide that guidance that I could not find. But yes, doing the email as well is I think very vital for that. Good. So I just wanted to basically pull up the bigger picture charts for timeframes for both for Home Depot and for XLY, which is the consumer discretionary ETF index. This level, I think for that was the pre-market. The red line is the pre-market high that I had going on from when we go to the next two pictures after this one. This is the XLY daily chart. So obviously we created new highs back in the first week of November. We had a pullback down towards 200. So ideally for me, we had probably like a 2 or 3 day range. So I wanted to make sure with everything that's going on with Home Depot, I wanted to keep on looking on XLY on the daily chart or on the overall throughout the day, both on the minute time frame and the 5-minute time frame, just to kind of see if there's correlation with that as well. Different pre-market levels that I was looking at, I just usually like marking off a pre-market high, pre-market low. So we have the low of 367.01, 382.91. One thing I do also like to usually look at is for some kind of, for that permutation, if there's a first move down, I like to see basically pre-market support as well. Just because if you do get a permutation where your stock does go down off the open, so ideally for me, I was looking at it and I would like to see if we did get a first move down, that it would hold 374 of that. That's where I was kind of basing my pre-market support to kind of be at. So off the open, on the minute time frame, like I said, for me, I usually like for a strong move up with some kind of retracement. So off in the first minute, we did break that pre-market high level, and what I was looking at too was I was looking for volume confirmation. In our 11 a.m. meeting, when I was going over the trade, one of the viewers asked, like, with this volume that you're seeing right here, what made you decide to get into this? So for me, off the open, the first volume bar at 9:30 was 193,000 shares, which was basically almost like 75 to 80% of what it did in the whole entire pre-market. So to see volume confirmation of like 193 off the open, and then at 9:31 of 175,000 shares. To me, that's showing that there's volume confirmation, that you're doing more volume in the first 2 minutes than you did all of pre-market in an upward movement. So I like that first opening drive, and with the decreasing volume going down with the pullback into VWAP. So for me, that was kind of what I like to look at to kind of see. Also off the open, looking at RVOL. However, what I've realized is that with earnings, a majority of your stocks are going to have higher RVOLs. Off the open, HD was trading at a 15 RVOL. On a non-earnings report catalyst that you have a stock trading at 15 RVOL, that's very exponential. So for me, I was looking at what kind of volume was coming in off of the open and what kind of RVOL we were kind of correlating to. So basically, what I would like to say, like I said, my permutation that I was looking at was a retracement back to VWAP. We did fall below that, so I decided for me, I said, okay, I averaged in at 181, and I said I'm gonna risk for a new low of day. That would have been at 179 would have been my stop if we were to create a new low of day, breaking the trend.
Yeah, I just don't know about that. And the reason I don't know about that is because I would have really, you said this before, I would have really liked for there to have been more full year guidance or longer term guidance. I didn't trade this. I didn't look at the report when this came out. I don't know if they gave guidance past one quarter, but that's not a lot of information. You want to think about, hey, you're a PM and you work at a fund and you'd like to keep your job and you'd like to make your clients money and you'd not like to draw down very much and they'd like for your firm to give you more money. You need information, you need clarity. You need to be able to justify your investment or your short-term trade. Harder to do that when you just have a quarter's worth of data, easier to do that when you have more data, when you have a full year's guidance or a couple of extra quarters of guidance. So, buying something that's gapping up on a quarterly report I mean, what's going to bail you out is that the sector's hot and the market's hot. That's what's going to bail you out. Housing's hot, construction's hot, the market's hot. That's going to bail you out from that. So because the market is strong, you might set a tight trailing stop. But that just struck me as, I'm not sure that in a different market that this would be something you'd want to put on a lot of risk. In a different market, I'm not sure you'd want to give it 2 points of risk. It's going to work in this market. It's not going to work in any other market. Lots of other different markets, probably, without more clarity on longer-term guidance. Because just the big money is not going to, in different markets, put a lot of money behind it.
Going with what you were saying about the justification of this day one trade, so I actually took this as well off the open, just for a quick opening drive scalp. And my problem with this trade, for me at least, was that I felt like after we got rejected at that 387 area, we lost a lot of momentum. And as we sort of reclaimed it, we kind of just consolidated throughout the rest of the day. So I definitely, for me personally, I was looking for a day two continuation and just see us kind of consolidate around these areas. But as for the trade itself, the reasoning for Caleb's perspective, I really liked that the index was really hot, the sector was hot, companies like Lowe's had good earnings reports also, and they were moving up, and I think that definitely played a huge role into why this could potentially be a good trade.
I like when people, particularly at the beginning of their careers, are scalping. I think that's a good way to learn how to trade. I think it develops really good trading skills, even if you don't end up a scalper later on. And in a strong market, when you find a strong stock in a strong sector, and it's making a new high of any sorts, getting long and playing the momentum to the upside and getting out when that momentum wanes, it's going to work a lot. It's going to work a lot in a lot of different stocks in a lot of different sectors at a lot of different times of day. It's going to work a lot, particularly right on the open.
I was going to say too, one thing, like I said, I think the reason why I wanted to obviously to do this as a dual presentation was because I feel like both like I said with Preston, he's a big momentum scalper off the open. So I feel like for one, that can be a way for him to kind of help me out to improve certain aspects that may be weaker than what I feel like are my strong suits. And I know I've always said that is that for me, I've always wanted to wait to kind of see where things are playing out before I enter into a trade. Whereas like off the open scalping, that's where I really haven't been successful with. So for me, that's why I felt like, especially with HD, this was a good one where Preston was in and out within the first 3 minutes, and I took it for more of a longer intraday trade. So I thought that would be a great way to kind of collaborate to see like what was he looking at off the open compared to what was I looking at to actually play it as an intraday trade compared to a scalp.
Yeah, and also just to add on that, I would definitely say Home Depot, I've realized it has certain characteristics. Like if you look around 9:45, we kind of consolidate and then move up. I saw something like that earlier today with Home Depot around the 4:15 area. And then also just with the opening drive type trades, I feel like you definitely need to be quick because if volume dies down, then the stock is just going to dump and it could reclaim. That's why definitely I've been working on position sizing accordingly to that.
So moving on next, I ended up putting the 5-minute charts for Home Depot and for XLY together just to kind of show the relative strength between the two. Obviously, I was hoping for XLY as it had a pullback into...
Good job using XLY with Home Depot.
So I thought that was one I wanted to see how was XLY doing in comparison to Home Depot as well. So moving on to the executions, my entries. 382, I added some feeler size on the retracement back and ultimately would enter in my final position in at 380. For me, like I said, the way that I was risking this trade was if we were to create a new low of day, my thought process was I was going to stop myself at 379. I did end up taking off about 50% total into these first two moves up into 385. One thing I was looking at though, going back into it, I feel like for me, in my personal opinion, my average price was 381, but I'm selling at prices higher or lower than what I entered in at. So for me I was looking at it and thinking like these, instead of taking 50% off into 385, the more of the correct.
Okay, so let's talk about this trade. So for this trade to be a really elite trade, you either have to add seeing the turn before you enter. So the stock's pulling in to an area that you want to buy at, and you notice from your tape reading skills that it's getting ready to go back up. That's scenario one. Or scenario number two, to make this an elite trade, you can recognize based on the volume and the move right on the open that this is something very likely, perhaps through back testing, this is something very likely to follow through. You need either of those two things to make this into an elite trade. Does that make sense?
Yes, sir. For me, basically, like getting out into 50%, it didn't make sense after I reviewed the trade why I was capturing profits with an average of 381, but to me, going back to it, especially with a back through open, we ended up getting a back through open right into about 382 at like 9:45. So for me, like when I'm looking at this trade, it doesn't make sense as to taking off size on a back through open at these levels. I would have liked to waited until that 387 area, but then I was waiting to exit out of the other 50% into strong pops up, creating new intraday highs.
Yeah, that makes sense. You are buying this stock, you're buying this pull-in because you think it's going to find a way to trade higher.
Correct, yes, sir.
And 383 is not really that much higher.
Correct.
387 was the prior high, so you might take off a little bit of risk, maybe a quarter of risk.
Yep.
Maybe half of risk if you're that's probably too much. But yes, I agree with what your thought process is there.
And looking at it too, with an ATR of, it was 5.17, opening price of 382, that ATR move up to 387 makes sense as to taking off the full, like that 50% into that 387, not that 50% into 383, 385. So it's like, yes, you are capturing profit, but you're not maximizing. So for me, and it didn't, once I actually went back and reviewed the trade, it's like it doesn't make sense as to why I'm taking off into 383 and 385. Plus with me risking a $2 risk into 387, it was a 3-to-1 risk to reward. Obviously, with getting into 383 and 385, you're decreasing your risk to reward ratio off of that. And then basically, so for me, it would have been ideal going back over it to take the full, either like you said, the 30%, 50% into that 387, and then exiting the rest of the position on new intraday highs.
Depends on how much you like the trade. It depends on how confident you are that this is going to finish high of day. That would dictate how much I take off at that former high.
Okay. Going into the improvements, obviously look for better prices to exit at the first two exits. Obviously, like I said too, around that 383 area, that's when I realized, like looking back at it, we're on a back through open. We're having some momentum on that opening price. You're now taking off a percentage of shares at 383 for a very low risk to reward ratio, even though that you are capturing profit size in that. And that's when I said the same thing down here in the second point about not taking off that full 50% at that 385 level. For me too, when I like to think, I have been really focusing on trend trading. So for me, I really like to see back through open plays as a back through open, creating new intraday highs, and then retracements back. So the one thing that I was looking at too was, obviously they're two separate trades. What I was thinking was that on a back through open, when you see that you're sustaining that back through open move, you're now retracing back to maximize the trade overall, would be to add position size on those retracements back and quickly getting out of them on those pops on the new intraday highs. So that was that's why I feel like there was three different trades, I guess you could say, in this first day. You have your opening momentum scalp, the way that I was playing it as a retracement back to VWAP, but then you also have the back through open as well. So that's one thing I was like, okay, like if you can maximize all three of those trades within this one day, you're maximizing your potential.
When that's pulling back in towards VWAP, you have a choice to make as a trader. You can observe what's happening as it's pulling back into VWAP and let other people do the work. I was actually having a conversation with somebody visiting us from Europe about this very topic. And there's two different ways to handle this. So you can buy based on price, or you can observe based on price, and only after observation, only after somebody else has done the work, telling you whether or not price is going to hold or not, this area is going to hold or not, you then enter.
Okay.
And so have you thought about whether or not you want to be the type of trader who just buys when it pulls back into price, or you want to be the type of trader who watches when it pulls back into an area of interest, sees who wins, and then and only then puts on risk. So I think it's going to pull back to VWAP. I'm going to observe what happens there, but I'm only actually really going to get long if I see the buyers win at that price, at that area. If they don't, I'm just going to stay on the sidelines. That's something to really think about with your trading.
Because that's where one thing too is like with that entering, obviously where I entered in at on that retracement back, that's why I say like that back through open, you see like on a hold of a back through open, you see what's happening. You see that obviously I entered in before that even happened. So that kind of like waiting to do that work is you see what is happening within the stock, how is everyone reacting to it, and on a back through open, on a buy and a hold through that, you're now seeing that level is sustaining. So that's why I did it when I was entering in my position. I was drawing down a little bit, but then on that back through open, that's that confirmation that you know what volume, what price levels are sustaining. So that's why I say there's for me, I thought about it as there's 3 different types of trades within that within the one day.
I'll be discussing my day 2 trade on Home Depot. So I really liked how we finished pretty strong the day before this, and I thought that we could definitely see some continuation. As I said before, I took Home Depot off the open and just didn't like that we lost the momentum in the first 15-20 minutes, so I thought that I'd look for day 2 on this. So we've been consolidating around the 370 area for a little while, so I really thought that this catalyst of great earnings could be our next leg up, combined with the fact that other stocks in that sector were also moving up, and the index was moving up as well. So my parameters of the trade were that I was going to take this for a opening drive trade above high day, which was 390, and my plan for the trade was to risk about $1 on it, so 389 for a full ATR move. And my reasons to sell would be if we couldn't hold VWAP, SMA, or if my profit target was hit, or if I stopped out of the trade, and that was it.
You traded this on day 1?
I traded on day 1 and day 2.
Okay, and so this is day 2.
Mm-hmm. Yeah. So this is just the XLY Daily Chart. As you can see, we're grinding up higher after earnings. And this is the XLY chart. And actually, throughout the day, I was looking for some sort of sympathy between the two. And XLY was actually pushing that day along with Lowe's. I was following that as well because they reported that day. And then this is the chart of day 2. So we got a push right off the opening drive, which I was anticipating, and then we kind of got rejected above upper VWAP, and that was around 399, which would have been a full ATR move. Well, actually 2 full ATR moves, and I really thought that 400 level was it was a psychological level, and I thought that we could potentially drop there and get rejected, which we did. And then honestly, there was nothing really else in my playbook that I would take throughout the day other than the opening drive on this thing. I thought it was really hard to trade after that. My first fill was at 393. Yeah, 393. And honestly, I should have definitely gotten into the trade earlier. Then as we were pushing, I added at 395. And then I also took a...
So why did you get in at 393?
There wasn't as much volume as I was hoping for, so I wanted to make sure through the tape that we were going to push. So I just gave it like 10 seconds, and as I saw we were pushing and buyers were stepping in at these prices, I entered with a stop below low a day, which was 392.
What were the levels from day 1 that were super interesting?
I would say 390. Well, I mean, we didn't break 390, but I would say, I mean, the thing was we were above all-time highs, so there weren't really new levels. It was more, these were new levels since we were above.
How did it finish on day 1? It finished at the high on day 1?
Yeah, it finished at the high, and the high was, I think, around 390, 389. So I wasn't really looking for a...
And so in the pre-market, it looks like it's kind of trading off, but then not really.
Yeah.
The left is the pre-market trading?
The left is how we closed.
Oh, how we closed.
Yeah,
okay.
So we closed at 392-ish, yeah.
Okay.
So that's why
That's the close. That's the end of the day trading. Okay.
Yes, sir.
Yeah, and then we didn't really gap, and then so my stop was going to be below low a day. So that would give me, I'd be risking $1 on this trade. And then I wanted to get some more size in, but
Yeah,
unfortunately,
so what you want to do is you want to look towards the very close and notice where it doesn't trade below, or where it doesn't trade above. So it's not trading really above there into the close. And now when it gets above there, maybe the momentum is to the upside again for a second day play, and maybe your stop is below 392, and you see if this will follow through. I mean, it's not great that there's going to be some resistance here at 394. I mean,
That was the high of the previous.
when I'm looking at that, what I'm trying to do on day one is I'm trying to find areas that will be meaningful if we get above or below. And so when I watch the price action into the close, I say, okay, we haven't really traded above here. And if we get above there, the momentum perhaps is going back to the upside. Okay? The only problem is, I think you've got resistance at 394.
Right, which is
and you have to buy the stock right above here.
in
We
case
show
we
that-
get, yeah.
Show that arrow. That's good day two trading. What are the areas from day one that are significant? What are the prices we haven't traded below? What are the prices we haven't traded above? If we get that are significant. If we get above those prices, I want to buy. If we get below those prices, I want to sell. And so that's what you're looking for on day one.
Right, and
That's what makes the day two trade good, is that you've observed the price action on day one, and you know better than more of the other market participants what those important areas are.
yeah, and something to definitely note was I wanted to make sure that we were going to get above that 394 area, and we weren't going to get rejected. But I definitely think to mitigate risk, it would have been smarter to get in before that resistance level.
But you can't buy at 394 on the open.
Yeah, yeah, no, I definitely think I should have been in.
Why
this
can't
trade.
you buy above 394 on the open?
Well, in case we get rejected.
Yeah, it's too much risk.
Yeah, exactly. Which is why I kept my stop pretty tight and was only going to give the trade $1. And then as we broke above that resistance, I then added in, and then just took off a very small, 5-10% piece into my second add. And then I scaled out into strength around 397, and then I was all out of
You
the
can't
trade.
do any of that. Okay, the trade is above that resistance area into the close, and you buy that and see if it'll run. That's the only buy you can make. 394, adding above there is way too far away from where this thing's open. There's way too much risk on that particular trade.
Right.
Can't make those trades.
And my thought process of adding a 395 was that I was just going to stop out at break even at 394, and that's why I made that second add. And then I scaled out.
Yeah, well, don't do that. And the reason why you don't do that is because there's too much risk, and you think you can get out, but you will not be able to get out. It's a $395 stock, and when it turns, it could be 2 points just to make the spread. And since it's so early on the open, it's possible that you can't get out for 4 points. So how do you control your risk in a situation like that? The only way that you could sort of buy that, it's just too far away. Your risk is all the way back down to 4 or 5 points. Now look, if it had gone sideways for a while and for time, and then it finally got above 394, and then you wanted to buy it on a momentum trade that way after some time has gone by, well, now you have some protection because you can see the last consolidation area, and you can get out from there.
Yeah. Yeah, and also that's something that I've been really learning with these opening drive trades is that you need to keep your average price as low as possible to mitigate risk in case we do get rejected at these higher levels. So overall, though, I'm pretty happy with my exit around 399. So it was pretty much the top move, and then we got rejected around there. Just
Yeah,
dumped the
look at
rest
those
of
red
it.
candles. That's a rejection area.
Yeah, definitely.
Get,
It's definitely
get
a
three pretty
serious-
big red candles in a row, I mean, the market's telling you it doesn't like that topping area.
Yeah, so it was a 6-to-1 RR, but overall the reason that my stop was so tight was because it was definitely, I mean, it was definitely, I needed this to happen right off the open, and if we got below low day, I would assume that my thesis was incorrect, and I wouldn't want to be in this trade anymore. So some improvements, definitely going back to what you were saying, and just making sure to keep my average price down and not add at those higher levels, and just I definitely should have gotten in the trade earlier than I had got entered. So I think that was a problem. But overall, I thought that 400 level was going to be a problem, and it was. So I was happy with my exit. I definitely just should have
Good.
made
Look,
that
you
second
picked a
out.
good stock. Did an excellent job with your exits. You're right. There was that better entry would have been good, but it did move a lot, right? I mean, it got above the resistance into the close and had a pretty good up move. So you did a good job with your stock selection. You did a really good job understanding where there was going to be some risk if you didn't get out. You got out nicely. So that's good. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.